Welcome back to Candlestick Signals for today's market for July 22nd, 2025. Today, we're diving deep into the candlestick patterns that are shaping the financial landscape. Strap yourself in, because the markets are painting a fascinating picture, and you won't want to miss what's coming next. The S&P 500 closed at a record high of 6,309.62, up 0.1% for the day. This index displayed a small-bodied bullish candle, closing at the day's high and above the historic 6,300 mark. It's a sign that bulls are still in control, pushing the market to new heights. The structure suggests continued momentum, with the potential for further gains in the coming sessions. Meanwhile, the Dow Jones Industrial Average climbed 0.4% to 44,502.44. Inching closer to its all-time high, the index formed a small bullish candlestick, indicating a rebounding trend. This upward movement in the Dow reflects growing investor confidence in value stocks and cyclical sectors. However, the Nasdaq Composite told a different story, snapping its 6-day record streak with a 0.4% decline to 20,892.68. The tech-heavy index formed a doji with a long upper wick, a classic sign of indecision following recent record highs. This pattern suggests that the Nasdaq might be due for a period of consolidation as investors reassess their positions in light of upcoming earnings reports from major tech companies. The CBOE Volatility Index, or VIX, rose 1.5% to 16.65, trading above its 20-day average volume. This uptick in the fear gauge indicates that investors are becoming slightly more cautious, perhaps in response to ongoing tariff and trade worries that continue to loom over the market. Let's take a closer look at the sector performance that's driving these market movements. Communication services emerged as a standout performer, gaining 1.3% on the day. This sector's bullish momentum was largely fueled by anticipation surrounding Alphabet's upcoming earnings report. The strong buying pressure in this sector formed a robust bullish candlestick, suggesting that investors are optimistic about the near-term prospects for tech and media giants. On the flip side, the energy sector faced headwinds, declining 1% as oil prices slid amid global trade turbulence. The bearish candle formed in this sector indicates that sellers are currently in control, and we may see further weakness if trade concerns persist. Turning to individual stocks, we're seeing some interesting patterns emerge. Tesla, a bellwether for the electric vehicle market, formed a candlestick with key support at 321.29. The stock's movement will be crucial to watch in the coming days, as a break below this level could signal a shift in sentiment for the broader tech sector. In terms of market breadth, advancing issues modestly outnumbered decliners on the day. The Nasdaq posted 97 new highs versus 56 new lows, while the S&P 500 saw 17 new highs compared to 9 new lows. This positive breadth, combined with elevated trading volume of 19.7 billion shares, indicates healthy market participation and suggests that the current rally has room to run. However, it's important to note the evidence of spinning top and doji patterns across tech and communication stocks. These formations indicate a loss of upward momentum and indecision after a sustained rally. Investors should keep a close eye on these patterns. They could presage a short-term pullback or period of consolidation in these high-flying sectors. From a technical perspective, the S&P 500's bullish momentum remains intact, with sustained closes above resistance confirming the uptrend. For the Nasdaq, the key levels to watch are support at 20,700 and resistance around 21,000. The Doji formation at the highs suggests that we could see some choppiness in the coming sessions as the index navigates this range. The Dow Jones, meanwhile, is showing signs of rebounding, with resistance looming at the psychologically important 45,000 level. A break above this threshold could trigger a new wave of buying in value and cyclical names. This structural move is supported by the outperformance of indices like the S&P 500, signaling broadening participation beyond mega-cap names. This trend could provide a more stable foundation for the market's continued advance. Robust corporate earnings are providing support, but uncertainty surrounding upcoming tariffs and the Federal Reserve's rate path is creating pockets of volatility and sparking some defensive positioning. We've seen this impact in reports from companies like General Motors, which reported a 32% year-over-year decline in core profit, citing tariffs as trimming $1.1 billion from quarterly earnings. It's worth noting the ongoing rotation into equal-weighted and non-tech sectors. Movement in this currency pair could have ripple effects across global equities, particularly for multinational corporations sensitive to exchange rate fluctuations. This wait-and-see approach from the central bank could contribute to market volatility in the coming weeks. Today's story is one of cautious optimism, with pockets of strength and areas of potential weakness. Stay tuned as we continue to decode these market signals and provide you with the insights you need to navigate these dynamic financial waters. In the currency markets, keep an eye on the USD-JPY pair, with key support at 145.84 and resistance at 149.18, while the Nasdaq showed signs of fatigue and consolidation after its multi-session rally. Breadth continues to broaden across value and cyclical sectors. The candlestick structures mostly reflect bullish sentiment for the S&P 500 and Dow, but the Nasdaq suggests potential volatility ahead as traders brace for key tech earnings amid unresolved tariff concerns. As we look ahead, the short-term market sentiment can be characterized as cautiously optimistic. The looming tariffs set to take effect on August 1st, 2025, are already showing up in corporate guidance and profit margins. On the policy front, the Federal Reserve remains data-dependent, with the next rate move likely to come after further clarity on tariff impacts and broader macroeconomic trends. In conclusion, the market on July 22, 2025, maintained its upward trajectory, with the S&P 500 closing at a record high. And prepare for choppy action as the market digests earnings results and navigates shifting policy headlines. The coming days will be crucial in determining whether the current bullish trend can sustain itself, or if we're due for a period of consolidation. Investors should watch for possible retests of newly formed support zones, monitor sector rotation into lagging segments. Remember, in the world of candlestick analysis, patterns are telling us a story. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.